So today I thought I'd do an update on inflation. We've not talked about inflation for a while, and with the data coming out yesterday, I thought this would be a really good time to talk about, are we still in a good place, are we heading into a bad direction at the moment, and my updated thoughts. Before I get into that, I just want to apologise because yesterday I was editing the video and then I realised the microphone was way too close to my mouth. So for you guys, you heard a lot of popping sounds. So I'm really sorry about that, and hopefully today the microphone's a little bit further away from my mouth. And also I just wanted to mention Disney. Obviously 2 days ago I made a video talking about Disney, and after recording the video and putting it up on YouTube, I kind of realised before how divided the opinion was on Disney, but then after reading the comment section, I was really surprised the division between people being optimistic on Disney at the moment on the share price and the people that are still really negative on it, it's still going to go lower, is really did surprise me. That stock is definitely the most Marmite kind of stock at the moment. You know, you love it or hate it, and there's definitely a big mix of opinions on that stock, which is really interesting. So yeah, it'd be really good to see how that one plays out in the next kind of few years. But as always, you know, you get the most negative sentiment when the share price is down. So always important to remember that. But let's get on to the inflation data and what's going on at the moment. So as we look in the inflation rate, you'll be able to see here that we did see a rise to 3.2 in July. And for August, we have actually increased to 3.7, which is obviously not good to see us moving in that direction. And when we do look at the press release, you'll see here that the index for gasoline was the largest contributor to the monthly all items increase, accounting for over half of the increase. So to know that half of this increase is coming from gasoline is obviously something to be looking at. It also once again pointed out shelter. Also contributing to the August monthly increase was continued advancement in the shelter index. Now the big thing here is that we've got two different things. We've got gasoline and shelter. Gasoline and energy tend to be leading indicators. So when they go up, normally everything else follows that because everything adjusts to the higher cost that they have to put into the business. Shelter is normally the lagging indicator because normally a lot of shelter is tied into contracts, and it takes a while for those contracts to get adjusted to the price increases or what's going on in the economy at the moment. So it's quite funny that we've got a leading indicator now that is actually rising up, but we've also got that lagging indicator that's still pushing up inflation. So when we look into the data, you'll be able to see the big jump that did actually happen in the energy category. So as you can see here, when you look at the energy commodities, or particularly gasoline and fuel oil, gasoline was up 10.5 and gasoline was up 10.6. So that was a major contributor to why we're seeing inflation start rising up. Now this in particular is not good news. So when we look at the oil prices, you'll be able to see here from July particularly, and this obviously ties into where inflation started rising again. You can see here the increase that has been going on with oil prices, and that has also continued into August. And the worrying thing is that we've actually seen this continue into September, which isn't good to see. So this is something that I was worried about happening, because this is a leading indicator. If this starts going up, everything else is going to follow. This is something to be watching out for, and this is a little bit worrying to see this going up in the background. Now the reason why oil prices is going up is because there's tightening on supply going on. There was also some suggestion that obviously there's the fears that there's not going to be a recession in the economy, which I don't know, because my fears for the recession in the economy are actually increasing now. Whereas before in 2022 everyone was shouting recession, I didn't believe it, and now everyone's going, oh, there isn't going to be a recession. And now for me, I'm looking, I don't know, I'm getting a little bit more worried now, but that's a different point. But at the moment the oil is going up because of the tightening supply, because there's a few greedy people out there that want to make a little bit more money. That is not good, and that's what's seeing oil prices that is going up, and that's what's inflation's going up. And if it keeps going up, unfortunately, that will make everything else increase. So I am a little bit more worried about this than where I were a couple of months ago, which isn't good. Now, if you do look at shelter, it does continue to come down, which is the positive. 0.3, 0.6, 0.4, we're all the way down at 0.3 now. So this is really good to see shelter coming down. Now this is where people don't actually realise that this is also something really important. Unfortunately, this is a lagging indicator. Where we talked about oil being a leading, this is a lagging indicator. So people have to realise that as soon as this keeps coming down and down and down, it's going to show where the true rate of inflation actually is. And as you see here later down in the actual report, it says that the shelter index was the largest factor of the monthly increase in the index. So even though we saw the oil prices go absolutely crazy, the shelter is still a major part of why inflation looks higher than where it is. Now you might be thinking, why is that? Well, actually, when you look at the makeup of the actual consumer price index, or the CPI, shelter actually does make up 32%, where energy actually makes up 7.5%. So this is what we mean. Shelter is a major part of the inflation report, and it's a lagging indicator, which is the frustrating thing. So even though oil looks like the main issue at the moment, shelter has always been the main issue because it's a lagging indicator what makes up so much of that. So that's why if we see that going down, you'll actually see inflation still do okay. So it's always important to put that into context that we see shelter coming down. But obviously the new concern is around the oil prices, and hopefully the oil prices do start to calm down, because we don't see everything else pushing up in value because of the oil prices going up. Now actually, when you do take the shelter out of the report here, we actually did have the CPI sit at 1.3%, which obviously is pretty good. You know, that is way in what the Fed is targeting to do. So this is why it's really key for shelter to still keep coming down, and that's the most important thing. So we are still watching for shelter to improve, and if you take out shelter, 1.3 is fantastic. So that's still moving in the right direction, which is the most important thing, but it is important to keep an eye on this oil prices going up, which is the concern. I guess ultimately that leaves us with the Fed. What are the Fed going to do going forward? Well, if we actually look at the latest numbers, interest rate traders now see a 97% chance of the Fed holding interest rates in September, and also a 61% likelihood of a pause in November as well. Personally for me, I don't believe them. I think that obviously, I don't know if the Fed are going to pause because of everybody expecting them to be pausing at the moment. But for me, I look at the Fed, and with the tone that they're saying at the moment, and looking at the latest inflation data and seeing inflation actually starting to creep up a little bit at the moment, for me, I would expect them to carry on hiking up interest rates at the moment, which is obviously not good. The higher those interest rates go up, obviously that's going to have eventually a knock-on effect where the economy will start feeling the pressure of these interest rates. And obviously a lot of these interest rates don't get felt into the system until a long time, 6-12 months later is when you start feeling them. So for me, I look at the Fed, and if the Fed are looking at this data at the moment, I don't think they look at that data and they're happy to pause. So, I mean, maybe they pause to keep everyone happy for September, but I would expect a hike back up in November for sure. So when I look at the Fed's point of view, unfortunately, once again, this kind of puts why I'm a little bit more cautious at the moment and building cash up, because I look at the inflation not at the 2% target of the Fed, even though if you take out the lagging indicator of shelter, we are at 1.3%. So the Fed should, in my opinion, be pausing right now. Unfortunately, looking at this data at the moment, if judging by the tone of Jerome Powell, I think they're going to carry on putting interest rates up, and unfortunately, like I say, for me that puts more pressure on the economy, and eventually there's a tilting point where the economy will start slowing down because of these interest rates. I think we are starting to see them looking in the job report, and at the moment, it just puts more and more confidence into me that I need to be having a cash pile just in case some opportunities do come up, and that's why I have personally slowed my buying down, never stopping. Obviously, I always say this, I'm never going to try time the market, but I am a little bit more cautious about what is currently going on out there at the moment. So hope you enjoy the update of what's going on at the moment, and if you could hit that like button, that's absolutely amazing, and I'll see you in a bit.